here I am today and speaking the same topic we spoke on Tuesday, 3 p.m. Central Standard Time. It is what? It is the Research and Development Tax Credit. And it is a very interesting topic. If you don't know it, you would never imagine there's money there for you. But if you know it, when you're in business, you will know how to apply to it. It is fabulous tax refund money you would get. And imagine that you could get it quarterly from the refund. You could get this refunded to you quarterly based on your 941 report that you submit. So basically, if you have a payroll running every quarter, payroll taxes you pay every quarter, then your research development tax credit could offset the money you paid to IRS on a quarterly basis. Isn't that amazing? So it is really all about what you know and how you apply to that. All right, so this is my PowerPoint. R&D tax credit for small businesses. I say small businesses because really every tax code, every tax rules, and it is the same rule, same code. But when you are small versus when you are huge, the implementation is very different. So I always reminded myself that my knowledge scope is really not for a company like Tesla, not for a company like Trump Towers, okay? So my knowledge and scope is really for small, medium-sized company. So to give you an understanding in Community CPA, if we talk about our small companies, our small business owners, and we have a lot of clients are ranged between 1 million and to 35 million. Then we have some clients are 200 million. So that is really where our expertise lays. We are not a $200 billion company accountant, but we are accountants. And if you're running your revenue under some like right around 7 digits, yeah, you are in the right place to be with Community CPA. So all the technical stuff we're talking about, and take it with a grain of salt, because our interpretation could be wrong. We don't want to be wrong. It's not like I'm proud of to be wrong, but it's not avoidable, right? So the more you do it, the more chance you have to make a mistake. So we want you to take responsibility and always verify the information. If you really want to use what we talked about as your guidance for your court case or for your audit or for you to do your taxes in a certain way, then I would recommend you to consult with us and engage that service relationship. As soon as you have the service relationship, then our professional liability insurance and your protection, everything is ignited, is beginning. But you can't get anything with a guarantee or with a surety out of the internet, right? So that's why we're saying that you want to take responsibility for what you do. Okay, now let's go about this R&D tax credit. The first few slides, I'm going to just talk through this with you. And folks, when someone tells you that, okay, there is a tax credit, there is a tax deduction, do you know the difference between the two? This is the difference. If you have $5,000 tax credit, and that means you have a saving of tax dollars for $5,000. And if you convert that into tax deduction, that is $25,000 tax deduction would equals to 5,000 tax credit. And in this formula, I was assuming your tax rate is 20%. So are you following me? So the difference is tax credit is reversing your tax dollars. Tax deduction is reversing your profit. Makes sense, right? Reversing your sales, reversing your profit. But tax credit is much more favorable, right? By saying that. Now, the second layer of understanding. Now you know you got tax credit. Oh, better than tax deduction. But then I also want you to realize that the tax credit is not necessarily against your income tax. It could be tax credit against your property tax, could be your tax credit against your payroll tax. You need to understand when someone tells you that, oh, you can get tax credit, your immediate question should be, credit against what? Credit against income tax, credit against payroll tax. So now, today we're talking about R&D tax credit. This tax credit against income tax and or payroll tax. See, it didn't against property tax. So I brought it here in front of you, making you realize if you have income tax you need to pay, your R&D tax credit can reverse your income tax. If you have payroll tax you need to pay, your R&D credit can reverse your payroll tax. Now, the third layer of understanding related to tax credit, whether it is refundable or non-refundable. What does that mean? If tax credit is refundable, that means even if you don't have taxes that you paid, you still get that check from the government. Non-refundable means that unless you paid those taxes already, then you get the credit back, which is still a check, but it's a refund check. Make sense? I'll say it again. Your tax credit has a refundable and a non-refundable. The difference between refundable and non-refundable is if it is refundable, you don't need to pay taxes. You still get that credit. You still get that check. But if it is non-refundable, means that you don't have taxes to pay. Sorry, you have that credit, but you can't use it because nothing comes back to you. You don't get a check. So a good example. The refundable tax credit, for example, earned income tax credit. People who makes very little money, they come into tax time, they're happy because they're going to get $6,000 from IRS. Why? Because it's a refundable tax credit. But people who are in construction, restoring historical building, they got tax credit. But if this builder never even paid taxes, and that tax credit is what? It's carried away, it's carried to the future years. You can't get that money back. You can't save taxes. That's why a lot of companies, when they get to that situation, they merge. So the company doesn't have income tax liability. They didn't pay income tax. They couldn't really get the credit. So they merge with the one that pays a lot of taxes. So then the refund can come in. Make sense? Right? So this is where I want you to, before we dive into R&D, which is easy, piece of cake, but I want you to understand the concept. So let's think it again. Whenever we look at tax credit, we immediately understand that is not the same as a business tax deduction. And immediately we know there is a tax credit. We think of credit against what? Credit against income tax, credit against payroll tax, credit against property tax, credit against state tax. Anything, everything is possible, right? So you want to be really clear when the government give you a tax credit, you know what to offset that to. The third one, tax credit has refundable, non-refundable. What you get is what? Because depends on what kind of tax credit you are getting, refundable or non-refundable, your strategy of your taxes could be different. With that said, let's go to R&D. All right, so this baby is also called Increased Research Activity Credit. And I'll just call it R&D because it is easy, okay? And this is to say that if you have qualified research expenses, that including materials and payroll that related to research personnel, and then also other expenses relate to research activities. And if you have those expenses, and the tax credit can be calculated out of these expenses. So let's say you have $100 expenses, then your tax credit is a percentage of that $100. So when you get that, let's say $5, And that $5 is tax credit, is not tax deduction. Got it? Right? Okay. Let's look at what type of, how do we do that? Like what type of R&D credit is there? So remember earlier when we talked about, Ying is, Ying is not everything and I don't know everything, but I am most familiar with these first two because that's the most of the small business owners are using. Regular credit, alternative simplified credit, they are just those private R&D, private research activities, not university research activity, which is on the very bottom of this column, and not energy research credit. And we're not really a big player in the energy field. I don't have energy companies who are my client. Mid-America, I would love them. If anybody listen to this webinar knows people at Mid-America, maybe you should tell them that to start hiring local CPA firm. And since they have a Mid-America here, I'm just kidding. Business. And never forget to advertise, right? I'm actually not very good. Everywhere I go, people ask me for a name card. I always don't have one. So I'm just thinking to myself that I'm the worst person to advertise for anything because I just don't bring anything. All right, so this first two columns are the two ways to calculate that credit. Remember when we calculate credit, that number we get hold of, it is a tax credit, not tax deduction. And it's a tax credit can offset income tax and payroll tax, income tax or payroll tax. You see the flexibility there? So of course we want to know how much we can get. So let's look at the first one, regular credit calculation with 20%. So this is our example. In 2022, oh, by the way, I want to say that today's webinar, it is really for 2022 tax filing. If you are going to do R&D credit claim in 2022, this is the right one. But if you are going to do it in 2023, it might not be, there's updates after the January the 1st, 2023. So my focus is on 2022, folks, okay? All right, so let's look at this. In 2022, and you have related research activity and expense for 100,000 on supplies and 100,000 on payroll. So if we add these two together, it's 200,000. Now, okay, I'm just gonna assume you're a pretty good accountant, okay? So the 200,000, normally it is your expense, right? You have an income, then you have expense, then this 200,000 somehow is inside of your expense. So because you are going to do R&D tax credit, so you need to take that expense out of your profit and loss statement and put that in your balance sheet. And put that in your balance sheet, put where? Put that under asset, because the IRS require you to amortize your 200,000. They're saying that, oh, since you're doing R&D, and don't put that on your expense anymore, take it out, put on the asset, and depreciate that for 5 years. So divide it by 5, and if you are US activities. But if you are foreign activities, say you have a factory in Mexico, you did R&D there in Mexico, and then you need to do 15 years. So only US activity is 5 years. So 200,000 divided by 5, I have 40,000 amortization expenses. That 40,000 would go to profit and loss statement, be my expenses related to R&D expenses. Okay, now this 40,000 need to be greater than your tax credit. It is really not even apple to apple comparison, right? Because our 40,000 is what? It's tax deduction. And our tax credit is really not even the same category. It's not apple to apple. And I just felt like a lot of those rules are very confusing because they make people think they're doing this apple to apple comparison. No, just separate them in thinking. 40,000 goes back to expense, and your tax credit it has to be less than the 40,000. Of course, it's going to be less. Let me tell you why. Because it's R&D base amount equals to, the reason we say R&D base amount, because that 20% we were looking at earlier, it is 20% times the base amount. So we need to tell you how to calculate your base amount, right? So your base amount is 200,000 divided by 2, so 50%. So your base amount is half of it. Now you have the base amount, then you know it's 20%, so you have a credit of $20,000. That is your tax credit. That is your tax credit, not your tax deduction. That is your credit against income tax or payroll tax. That is a non-refundable tax credit. So what does that mean? If you don't even have a profit, you're losing money, you don't have income tax you need to pay, why are you using credit here? You should use that in your payroll. Make sense? All right. So, but one thing, that $20,000 tax credit, they require you to add it back to the profit. So that means, let's say you have a $20,000 loss after you calculated your profit and loss statement, you have a $20,000 loss. Now you're going to put this $20,000 back into the loss, so you break even. They want that number to go back as a profit, but they are not saying that it's a tax credit. So when they go back, they just add it into the profit, and then you can pay income tax for it. But in this case, if you already had a loss, you add the $20,000 back, you still don't pay taxes. So your $20,000 tax credit here should be used against your payroll. Make sense? So that is one example. That is the one we call regular way calculating R&D. And folks, when you do R&D, of course, I know that you are going to, I'm looking for that little cheat sheet I have here. So you will use the form to fill up those R&D credit. When you use these forms, folks, and I know you are going to, the system is going to help you. You're not going to be thrown in the dark and not knowing how things were calculating, but to know how to calculate yourself this way is a good verification when you just use computer filling numbers and you don't even know where that number comes from. And I want to show you the other alternative way. That is also a way you can calculate 2022 R&D tax credit. All right, so let's see. Examples here. So in 2022, I want to calculate R&D tax credit, but I want to use alternative simple way. So the alternative simple way is I need to know my R&D expenses for 3 prior years. So 2019, 2020, 2021. So you can see I spent 100,000 2019, 150,000 2020, and 50,000 2021. So now, related to research activity and expenses in 2022, I have the same. I spent 200,000 in 2022. So I do the same. I remove my expenses of 200,000 out of my income statement, out of my profit and loss statement, put that on my balance sheet, and I depreciate that for 5 years because I'm a US activity, and then I can deduct 40,000 instead of 200,000. Now, I know the credit cannot be, my 40,000 has to be, my credit has to be less than the 40,000. I know that, and I keep that back in my mind. And the R&D base amount calculation, folks, pay attention to here. So that base amount calculation is different from what we did before. What we did before was a regular way, and we take the total expenses divided by 2, and that was our base amount. So it was 100,000. But you can see that our base amount in this scenario is 150,000. Why? Because we add 2019, 2020, 2021 together. We divided by 6. Why 6? Why not some other number? Because we divided by 3 first. That is each year, right? So we got average year come out. Then we divided by 2 again because that is half of that amount. So with that said, and we have 200,000 minus this 3 number divided by 6, and we came up with $150,000. $150,000 base amount. So now we use 14% times base amount. So my credit is what? 21,000, was $1,000 more than what I have calculated in the regular way. So maybe this is a thing that when you go to your tax preparer and they calculate your R&D tax credit, and maybe you can just be so smart by saying that, which method were you using? And then your tax preparer may be saying, oh, regular way we did. And then you can suggest that, did you try the alternative simple method? See whether we can qualify more. Then maybe they will tell you that, oh, no, you won't qualify more because we already tried, because your prior 3 years R&D expenses were a lot higher than your 2022. That's why you don't. Then that is a good tax accountant, okay? If you got someone talk to you like that, stick with that person because they know what they're doing. All right, so with that said, we got $21,000, okay, for the credit. Same thing. And you want to decide whether to offset your income tax or you offset your payroll. And which way to do is really depends on how your business is doing, right? Okay, now I want to talk about this Inflation Reduction Act. This is a new law, came out August 16, 2022. This is President Biden signed into the law. And in this law book, it says that the R&D tax credit you use to against your payroll, okay, against your payroll taxes, that's allowed, okay, that's allowed. But when you against your payroll in the past, they have a threshold of $250,000. You cannot go over that amount, okay, in the year. But now President Biden made it bigger. He doubled it. He goes, don't go over 500,000. Folks, I don't have any client can go over 500,000. Imagine these are tax credit of 500,000. That is a million sales reduction. Okay, it's a big company deal. And here, and I just want you to know that the portion to offset limited to the employer portion of Social Security and Medicare tax, limit to that. So you cannot use your employees' income tax withholding. They are paid in Social Security, Medicare. The IRS only allow you to touch the employer contributed portion. All right. Make sense? Makes sense, folks, right? Okay. So now I kind of want to cover the claim, like definition of the qualified research activity. So I listed a bunch of things that doesn't qualify. So one of the things I want to make sure, in general practice as a small business, and you will, you will say that, well, yesterday I bought a QuickBook and I start doing my accounting. And, I was researching which computer software and which accounting software is the best. I finally decided on QuickBooks Online, and that effort, that expense, and is my research and development. No, because you haven't really invented anything, right? It's more for you, like you go to Walmart shopping for vegetables, you're just picking one out of another and you decide on one, but that's not research and development activities, right? So duplication of an existing product or process, that's not invention. And the survey or study, yeah, I'm doing some research about client satisfaction. So I made this survey. I printed nicely. I package them for my client. I send that out. Total expenses 5,000. Ying, I got R&D expense. No. That's not survey and studies on your customer basis. That is not R&D. So there's a bunch of things I listed here, folks, just so you know that. And if it is research effort to you, that doesn't equals to R&D. Research effort to a unknown, to invent something so that you can commercialize it. That is more like R&D, okay? All right, our last slide for today, it is in the event of you getting audited and how you're gonna get by with proving the R&D credit is legit. So you of course need to have your payroll record because you included some people's payroll into the R&D deduction. And of course, these workers, you have their name and their time and maybe their timesheet description that should support it is a research activity. Then you also should have your general ledger expenses detail available because the IRS is going to say that, okay, you claimed $100,000 on supplies. We like to see what they are. And we like to know what is your total supplies in the whole year so we can make a reasonable analytical judgment on that. And they also want you to outline your project, your research activity, steps, and the content of it, what you're trying to get, what is your outcome. So all of these documentation need to be available. And you want to make sure that your emails related to research activities, everything is subject to IRS inquiry when they want to prove that this is not a research activities, and you have these documentation can prove they are, that would ultimately win the compliance review, right? So of course, I think IRS auditors, should be happy when they come to you, you have everything. So hopefully you can send them off nicely. They don't have to stay in your office for a month and a month trying to figure out, why are you doing it wrong, right? So all of the things we talk about has so much to do with what we know in our practice. So I'm not going to exaggerate that I know everything. Of course not. But I know really well for the small businesses how you should apply for these tax credit. And you can see this is my first book I wrote back in 2019. It's called Appointment with Ying at 8 a.m. And this is the book about starting up a business. So you're ambitious, you're desiring to have this American dream, dream big, you want to start a business, and you really should read this book. It's not a hard read. We have audio copy as well online. You go on Amazon, you can find what we have there. And it's 200 pages, lots of stories. And my way of reading my book is when you flip it open, you will read one story at a time. So it is not a maze. You have to go from the beginning to the end. It is a book that you flip the page, you can read that section. That section alone will tell you how to start up a business. All right, and then I finished writing the second book, which is Appointment with Ying at 10 a.m. just last month. Last month I finished it. And so it will be published soon in March or April. And I know there's a lot of things need to be done with the publisher, but the book is done. This one is growing your business. So when you start up a business and your second stage at 10 a.m., not 8 a.m., 10 a.m., you grow, right? You grow your business. So I will be on my journey to write the third book, which is 2 p.m. and the fourth one, which is 6 p.m. And both books talk about merger and acquisition and then retiring from the business. So it is a business journey that I laid out within a clock time, 8 a.m., 10 a.m., 2 p.m., and 6 p.m. Look forward to my book. And I really hope that you enjoy reading it. If you know me somewhat in person, you will relate to my book really well because I talk about myself, talk about things around me and things I see. So, you'll definitely figure out what kind of person I am. The foundation I lay in the book is more about, as a business person, you recognize who you are, and then your shortcomings and your strength all coming through how you grow your business. So I have shortcomings. I also have strength in growing Community CPA, which I lay that out in the book. So with that said, I just want to say it again, follow Community CPA on YouTube channel. We're really good with that, and you can learn a lot from what we're talking about, just like today, and give you a little bit understanding of the business tax credit, deduction, and credit on what kind of taxes, and refundable, non-refundable, R&D. So these are all very useful information. I will see you again on Saturday, 3 p.m. I'll figure out what I can talk to you about because I'm still surveying my staff, figuring out what was the last week's most frequent asked questions. Then it's become our topic for Saturday. I'll talk to you again. Bye-bye.